What's up, guys? Welcome back to the channel. Welcome back to ProMG Money. I hope you've been liking the content I've been putting out so far. Does take some time to do. No one's watching right now, which is perfectly fine. We're not in this to be seen or to watch. We just want to help people, and I mean, with what I'm doing, if I can help one person start their investment journey, I think I would have done a good thing, because there's money to be made. There's serious money to be made through investing, but a lot of people just don't know, and that's the point of what we're trying to do here. We just want to help someone, or anyone, or you. It could be you. You could actually not have the appetite for this and move this on to someone else. I would suggest it to someone who you think would benefit from it, because investing is not for everyone. That's the first thing, and it's also not for the faint-hearted, because really, one day you're up, one day you're down. Things are never always going to be the same. So I would say, if you want to follow me on this journey or get into this type of thing, do it, but do it wholeheartedly, but do it knowing that you could lose it all. You could literally lose it all. We're not gambling. We're actually not even taking a calculated risk. We are taking a risk, but we're informing ourselves beforehand of what are the possibilities of our risk going bad, and things also won't go to bust. So it looks like my eyes are smaller, my eyes are like closed. I'm really tired. It's been a hectic work week this past week, and I'm yet to fully recover, but yeah, we move. Okay, cool. So we're going to move it over to our ZAR account, ZAR being South African rands. I didn't explain last time, but on our ZAR account, you can only do JSE traded stocks. Stocks, companies. Again, always I use these words interchangeably. Sorry, but you get the gist of what I'm saying. So yeah, you only get companies that are listed on the JSE here on this ZAR account. So hence why the actual account value is always going to be in rands. The profit and loss also going to be in rands. And yeah, that's just that. So current account value was sitting on 3,477. Our profit and loss is 1,489.99, which is up by about 74, almost 75%. So last week our ZAR account was sitting on about 3,148 rand 31 cents. The profit was 1,160. And we're sitting on about a profit or loss of about 58%. So today we are up to 3,477 rand 83 cents. Total profit being 1,489. So what you need to know is that the total profit, that's the amount we've made in profit. The actual account value, so to get how much I've put in, take the account value. Other way around, take the profit, minus it from the account value, you'll get how much we've actually contributed. I think based off of that, you'll see on this account we've contributed 2,000 rand. 2,000 rand exactly. We're sitting on almost about 3,500 rand from that 2,000. And then last week our profit and loss percentage was about 58%. This week we are sitting on about 70, almost 75%, which again is really good. Let's see why. So let's actually find out why things are so different this week. If we scroll down here, if we open up our holdings and we see, first thing that we see, everybody is green. From last week, we had 2 reds, 1 green. This week, everyone is green. Capitec, you're green. First Rand, you're green. Everybody's green. This is what we like to see. We won't always see this, but this is the exact thing that we like to see. And let's go into a bit of depth. Capitec is up by about 4.57% versus last week we were down about 5%. So you can call it about a 10% swing in the one direction. Really good. I'm happy with that. Same thing with First Rand. First Rand last week was down by about 3%. Now it's up to 4.1. And I don't actually know why that is. I actually haven't gone to go and do my research to see what happened, but chances are there was some good news that came out or something that was positive in the banking sector that led to this happening. That's generally what happens with these things. But obviously, again, biggest mover, Sasol. This week we're on about almost 100%, so we're almost at that magical 100% number on Sasol, meaning that we would have doubled our money. Great stuff. But last week we were on about 80%. So I think the markets in general in South Africa have been really good this past week. I don't know why. I've been really busy. I haven't actually had time to go look at it. But normally what's supposed to happen with these things, I'm supposed to tell you that X, Y, Z happened in the market and that's why things got better. But this is a pleasant surprise. I wasn't expecting this. I was thinking it was going to be stagnant because, truth be told, from week to week I don't see us experiencing that much of a change. Generally things don't change that much in the market over a week's time. Like one thing will happen and obviously that week will be a change from the prior week, but if you actually take it week on week, things don't always change that much. So I guess, yeah, don't expect every week for there to be a massive change like this. Yeah, I mean, here it's almost, we've increased our output by about 20%, or our growth by about 20% on this account in just a single week, which I think is really great. Unrealistic for a short-term thing. So, but yeah, in general, things are good. And if you actually look at the actual rand value that we've added to the account at this stage, the account has grown by over about 300 rand just in a week from doing nothing. We did absolutely nothing. I haven't put any more money in it. No new options or companies, nothing. That's how this thing works, is that it fluctuates. 1 week it's up, 1 week it's down. Fortunately, here in the early weeks, it is up. And saddest things, no one is watching these videos right now, which again, it's not complaining, but me mentioning it is a complaint. But when things are good, there's no one watching. Let's see what happens when things go bad, because things will eventually go into the negative. You can't always be up on up and up. So yeah, let's see what's up with the other account. Okay. So now let's look at our USD account. So last week our USD account was sitting on $244.15. That was the actual account value. Our profit last week was $136.54. This week we're on $183. So that's give or take about almost $50. It's not exactly, but it's almost $50. The total profit on last week was 126%. This week it's 170%. So that is quite a good jump if you ask me. Let's scroll down to see actually what happened. And yeah, we'll go over our two positions again. Green and green. We had one red, one green last week. Last week, JP Morgan was down by about 55 cents in dollars, which was a negative 2.3% position. Tesla last week was up as always, but the percentage was about 162. This week it's about 217. So that is essentially, is it double or 2 or 3x in our money? Because we bought Tesla for $83, but now it's worth $288. So I think that is double. Yeah, that's about, we're almost going 3 times more what we've actually gotten, which I think is a really good return. But like I said in my State of YouTube video, I think Tesla right now is a bit too, not overpriced, but the market is pushing it a bit too high. Truth be told, we've not gotten over the effects, or we've not even began to deal with the effects of the virus that's going on right now. And you can't be, seeing the stock market gaining every day or positions this high without considering what's actually happening in the real world. You need to understand, Tesla's main business is to sell cars. And if the economy is down and no one is buying cars, Tesla is not making money, they're not making profit. Therefore, you cannot justify the current share price that it's at. I mean, look at it. It's at about 1,692. You can even take away a whole 1,000 from where we bought it initially, and we'd still be in some good money with that. So Tesla currently right now, I'm not saying it's going to crash. I don't think it's going to crash. I think the stock price is still going to keep going up. I just think be ready for a retracement. And this is without me looking at any charts, anything like that, because another thing that I did mention in my State of YouTube video, technicals are great. Technicals mean a lot, but please, price doesn't follow a chart. No one thinks about Tesla stock and be like, oh, Tesla stock is about to reach its support level. Let's start selling, or short sellers. Short sellers don't look at things and say, no, Tesla's reaching high highs. This is the time to start short selling. Short sellers might have positions and they might be waiting for the market to reach the right conditions until they put in those orders. Same things with people who are buying. You can be monitoring the price and saying, okay, overall, I think this is going up, but you're waiting for it to hit a certain level. Then when it hits a certain level, you hit it so that you get the momentum. That happens 110%. I agree with you. But the overall movement and direction that things happen can't be purely based off of a chart, specifically with companies. I know our friends over there by the forex things will tell you different things about double top, harmonic patterns, and so on and so forth. Great. Whether it works there or not, SARS. But what I'm saying here is that for stocks, keep it simple. Don't follow those things. It's a good indicator to see prices, highs and lows, but overall, don't worry yourself about that. So first thing I do when I look at a company, right, is I just Google the company without looking at their share price. I just Google them, and as you can see, it says Capitec Bank is a retail banking company, and it says Capitec is a South African retail bank, as at 17 August was the second largest retail bank in South Africa, based on numbers of customers, with 120,000 customers opening new accounts every month. You see, that gives you a short overview of the company, what the company does. But I think an interesting thing is that 120,000 customers per month. That's a really big claim, and I do believe that they do make those numbers 110%. The problem is that you're not always going to make those numbers every month after month. So that can eventually catch up to them, the fact that they've actually listed that as one of the things. And yeah, that's pretty much that. So here's a chart that you can see from Google with 1 day, 5 day, 1 month, 6 month, and maybe let me take you through. So I always start here at the year to date, and you'll see on Google it's actually just a red thing. So that just shows you that over the year, or since the beginning of the year, they've been in decline. And you'll see their highest point, I mean, early on in the year they were at about, what is that, 140 rand? Was it 1,000? Oh, sorry, it's 1,400 about. That's more or less the high. Now they're sitting there in June. They almost made it back up into the thousands, but now they're sitting at about 896 rand 30 cents. You finally got that out. So what you need to understand here on MoneyWeb, this is the main price that you're getting over here. That's the important part. Open, close, range. The only thing, open, close, you don't look at because it's going from a day to day, and we're not trading, we're investing. So our day to day don't really apply to us, but it is nice to know that it opened at 871, whereas it closed the other day at 864. So you know things are better. Doesn't really matter to us. Bid, that just means if you were to buy, this is the price that you'd pay. Bid volume, who cares? Offer, who cares? The important thing in this first mini table up here is the range. You want to know within the time period that you've chosen, what is the range? So I can tell you now that this range is the intraday graph. So it's going to have that range. So always what I do, I always start from as long as I can. So on MoneyWeb, you can go up to 5 years. And maybe before we go there, MoneyWeb actually has an intraday, this part, this is intraday graph, and it shows you in the last 7 days, they are up by about 4.66%. Last 30 days, they are down by that same percentage. Last 90 days, they are down by almost 4%. 6 months, they are down. 1 year, they are down. Year to date, they are down by 40%. Remember what I said to you about stocks on sale, or companies that are on sale? This is a company on sale. Year to date, down 40%, and there's nothing actually wrong with the business. That is telling you that something is not, well, maybe not the way it should or shouldn't be, but you can get it at a very good price. 3 years, it's up. 5 years, it's up. So I always go over to the 5-year graph, and you'll see in 5 years, it's had a steady growth. One dip there sort of in 2018, Wonder what happened there. Went up, had a dip pretty much all the way, I think the first 6 months of 2019 until like August, rallied all the way back until January of this year. Beginning of this year, or like December last year, but January this year was really good. Things started to decline. Then came in the virus, shot it all the way down. But it's slowly but surely making its way back up. I really wish there's a point here where it was about 600 and something. This 682 Rand on the 19th of March, I wish I was trading on that day. Not trading, I wish I was looking for stocks or companies to invest in around about that period. We would be so high up right now and we'd close that gap, because on this company alone, I know that its underlying numbers are good. I didn't really look at them when I picked this, which is wrong. You shouldn't do that. Double, triple check everything. But I looked at the price when I bought it and I said to myself, okay, it's lower compared to where it was initially. And Capitec is a 1,000+ company. So I knew that the price is one day going to make it back up into the thousands, and who knows, maybe it'll even make it back past the 1,400 mark and even past that. That's the main thing that I'm banking on. So that's the main thing that I looked at. EPS is your earnings per share. So this is how much the company makes per share. So simple way to say that if I've got a company with, let's say, 100 shares and we make 100 Rand, that means the earnings per share is that you've made 1 Rand for every share there is. If we had 100 shares but we made 200 Rand, gives us an EPS number of 2. So that's essentially how EPS works. PE ratio, and this is the main thing that I look at personally, is price over earnings ratio. So that's essentially it takes your the price of your stock and your EPS, or divides your price by your EPS, and it gives you sort of a ratio, which essentially will tell you whether a company is over or undervalued, or versus its stock, actually how it's performing. If you're one of the people who follow Warren Buffett and his methods, you always want to get something with a PE ratio of under 10. I think anything between 10 and 20 is still quite good. There's still room to be made, but anything that goes up to the 30s and beyond, really, you're playing with fire. So PE ratio is that. Forward PE is just the expected PE ratio in the future. Then you've got dividend yield. So they have a dividend yield of 0.87%. Dividend yield basically means how much dividend you get based on what you paid for the actual stock. So let's say, for example, if you bought a company's stock for one share, I should actually use the word share because that's what we use in South Africa. If you bought a share of a company and the price you paid was 10 Rand, and they gave you back, let's call it, they give you back 10 cents for every share that you had. That's a dividend yield of 1%, because from the money you put in, they're giving you back 8%. So that's the yield you're getting from what you initially invested. That's how you get your dividend yield. Then they'll show you the actual price on last dividend. Your return on equity, that's how much you would have got back. I don't really focus on that. Return on assets, net asset value, authorized shares, you can look at them, don't really. The important thing that you need to know is the EPS and the PE ratio. Those are the two things that you look at the most. So yeah, my thought process with this, as I said, Capitec was under the 1,000 mark when I got it. I truly and well think it is a 1,000 Rand stock, and therefore, because it's a 1,000 Rand company, or a share should be worth at least 1,000 Rand, I feel as though once things go back to normal, it will get back up to that level and actually push back maybe to that 1,400 level. Do I see it bottoming out? No. I mean, like I said, in March, at the height of this thing, the lowest it got to was about 682 Rand per share, which still quite good. I think it's still a really good price, or a share at that price, and I don't think Capitec is going to go under anytime soon. I used to be wary about them, you know, when they had that whole association with African Bank, whoever was the main holding company of Capitec was also involved in African Bank, and that bank was liquidated. So, such things made me a bit wary about Capitec, but I think over time I'm getting a bit better. I like the company. Like I've always said, the queues outside the malls and shops of Capitec are always colossal. Always, without fail. You go to a shop month end, the Capitec queue is crazy. So for that reason, I always feel as though Capitec is going to do really good, and that's pretty much why I've chosen Capitec. So now I'm taking you over pretty much how I go over this in my head. Just a little bit of my thought process, how I got to this Capitec valuation. I don't think that you should follow my exact methodology of how I do it. Just looking at the graph, looking at where prices have been, where price is, seeing there's quite a substantial gap, and then also having confidence in the company, and then looking at your PE ratio, your EPS, and all of that. That's how I do it. Might not be the best way, might not be the most efficient way, but I mean, it's yielded results for me so far. The two companies that I've gone really big on, this is, okay, with Sasol, that's what I did. Tesla's a slightly different story, and I'm sure I'll make a Tesla video sometime soon going over that. But essentially what I'm saying to you is that companies that companies that are around you every day, pick one of those. If you understand what the business is, what they do, how they make their money, go then open up MoneyWeb, look at their graphs, look at their EPS, and then decide for you what's the best way forward. So what I'm saying to you is, please get involved. Please start this journey. If you don't have money, that's fine. Open up a demo account on one of these brokers or platforms. Please just start. Get your feet wet. Do something, because it's the only way that you'll learn. You'll only learn once you're inside, once you start doing things. And as well, please don't look at my numbers and think that these are representative. I think I've just been really lucky with what I've chosen. Things have really gone in my way on the one part, but other people would say that you just use a bit of this and this is what happens. Take it how you want to, but get involved, get started, and I'm sure eventually you'll get to where you're going. And then, having said that as well, if you've watched my previous video, you would have seen we've got two giveaways basically going on the channel right now. We've got the one that runs till the end of August, that if by the end of August we've reached 5,000 subscribers, I'm going to then put 5,000 Rand into someone's investment account for them to choose and put on any stock that they want to, or if they want to just withdraw the 5,000 and go blow it, totally up to them. They can do that, but that's coming up end of August if we reach 5,000 subs. So 5,000. Then if we get the big goal of the end of the year, 50,000 subscribers, for every subscriber I'll put a rand of my own money, 50,000 Rand. And yeah, I might even spice it up and say, if we get it before, I can double it or whatever the case might be. But essentially, I'd like to help someone get started on the investment journey, but I need to see the benefit for myself as well. So hence why I'm putting the stipulation of, first I need to get the subs, then I can start to help people out, because ultimately, like I keep saying, that's what I'm trying to do. I'm trying to help people achieve financial freedom, real financial freedom, not what those guys there at Forex tell you. I'm really trying to show you the steps that you need to take to live a life where you're living off of money, or your money that's made more money. That's what we need to be doing. We can't only be relying on our salaries. We actually shouldn't even be counting on our salaries. I'm trying to get to a point where I don't even have to worry about going into work or having a monthly income from a job. I want, to be in a position where my dividends are paying me every month, where my dividends are covering all of my expenses. There's this movement that they call a FIRE movement. It's the financially independent, retire early. That is exactly what I'm going for. I want to be financially independent, not have to rely on anyone, any company, any business, just be independent on my own and be able to retire early, when I'm 30, when I'm 40, whatever the case might be. As it stands right now, I'm 25, I've got 5 years to go until I would have reached that retire by 30 age. I doubt I actually will retire, but for me, it would be nice to know that at 30 years old, I can rely purely on my investments to maintain my lifestyle and to cover all of my expenses. So that's what we're going for. So don't forget, 5,000 subscriber giveaway by the end of August and 50,000 by the end of the year, should we make it. Money on the table, up for grabs. And yeah, that's that. I think that's all I have for you guys today. Thanks for watching.